Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I want to start things off today by saying, once again, the memes just keep writing themselves. We saw this big news come out, or seemingly big news, earlier in the week, that Nvidia had been subpoenaed by the Department of Justice, escalating an antitrust investigation. And this was printed by all major outlets. This had a lot of people quite worried because they were drawing parallels to back in 2000, right before the dot-com bubble, when Microsoft were investigated for similar antitrust issues. Needless to say, a recession unfolded and a big bear market for the stock market. And so a lot of people were kind of stressing about this, particularly as Nvidia makes up such a large chunk of the US indexes. But within a few minutes of the closing bell yesterday, new news came to light that they had in fact not been subpoenaed by the Department of Justice. Which of course begs the question, was it just a half-cycle low shakeout and are we about to run it back turbo? That's to be determined. But you can see right here, the same mainstream outlets that were spreading this false news are now issuing rebuttals, are now coming out and saying, actually, everything is okay. So I don't think I need to say what I want to say. I think you know exactly what I think about this. I'm just going to say, wild times to be alive. We also had a bit of macro data come out yesterday, which was the JOLTS, okay, the job openings. They were coming in under the expectations quite significantly as well. So not a good sign for unemployment relaxing, not a good sign if you want us to avoid a recession. Today, the focus is going to be on the initial jobless claims, okay? That's due out at 1:30 today, GMT. I do think this is going to be a major market moving catalyst. I know there's always a bunch of people when I cover this kind of thing that say, hey, Camel, we all know the job state is cooked, or we know we can't trust the data. We live in these kind of wild times, so why are we even paying attention to it? And the reality is, I'm not really giving my energy to it. I'm not making trades based off of it. I'm just suggesting that even though we agree the data is not really that reliable, what else are we supposed to do? Okay, I can ignore it, and for the most part, I will ignore it since we're using the charts. But the majority of market participants, Wall Street analysts, et al., they're not going to be ignoring it, okay? They're going to be taking this into their consideration. And as ever, it's not really the numbers I'm too worried about, it's the overall trend of the data. Yes, revisions keep getting made, but again, we continue to just track the overall trend of the data. So whether you like it or not, whether you want to ignore it or not, I do believe that unless this thing comes in right in line with expectations, it's probably going to move the market significantly. Even if it does come in right in line with expectations, right out of that half-cycle low across the board tells me to expect a little bit of a relief rally in risk assets. If this thing starts to spike massively to the upside, again, I would think that it probably has bearish implications. So, I mean, you can ignore it if you want to ignore it. But I do think this is going to be a major market-moving catalyst, as I said. We also saw the Bank of Canada cut interest rates by 25 basis points. It begs the question, are we going to see 25 or 50 basis points from the Fed? We are less than 2 weeks away now from the FOMC meeting. The CME currently has us at 50-50. We are going to find out soon enough. Also, as of yesterday, we had even more significant data because it's now been 790 days that the yield curve has been inverted. This has been the longest yield curve inversion in history, and it started all the way back in 2022. Well, it just ended. Okay, we have officially reverted and crossed back above the zero line now. Historically speaking, this is synonymous with recessions. And for all the people that keep getting this whole rate cuts thing, is it bullish, is it bearish? Remember, it's all about the context. If we are cutting into normalization, then we can see bullish rate cuts. But if we are cutting into a slowdown against a backdrop of an inverted and, more importantly, reverting yield curve, typically the stock market tops within a couple of months of the onset of that cutting cycle. Something else we've been tracking is the high yield credit spreads. Okay, you can see here, we had a little fake out on the Japan carry trade blow up. Since then, comfortably back inside of our little wedge. To me, it does look a little bit like it is bottomed out here and is getting ready to spike. Now, it doesn't say when we need to spike, but one thing we do know for sure is prior spikes have been synonymous with meltdowns such as the C19 meltdown. And if I go all the way back to, let's say, 2008, you can see big spike in credit spreads synonymous with recessions. So it hasn't happened yet. It's not me sounding the alarm. But if we do indeed get a breakout in the not too distant future here, then it will be likely another indicator we can use to let us know that tough times are coming and a bear market for the stocks is about to ensue. And so with all of that said, the big question, of course, is when alt season, right? And the honest truth is, I don't care, okay? But I know you guys do, so don't say I never look out for you guys, okay? Uncle Camel is here to give you your altcoin hopium. Okay, here we have the crypto total market cap excluding the top 10. It's trying to make a higher low right here and look to resume to the upside, okay? So start to make new lows below this low, you've probably got issues. However, if this is a higher low, then maybe, just maybe, okay, it is time to send these altcoins higher. And we got a similar thing going on here for the crypto total market cap excluding Bitcoin and ETH. We've even got this inverse head and shoulders at play. We've got this big downward sloping resistance line. So if we can indeed form a higher low here, work our way up and get a breakout, then maybe, just maybe, your altcoins are going to save you. The 300 billion Zurich Bank has launched Bitcoin and crypto offerings. Okay, so under the hood, adoption continues. Adoption continues to continue. And Japan has announced that it's going to drop the maximum tax rate on Bitcoin and cryptocurrency from 55% to 20%. Under the hood, the current cycle on the left, okay, this is a 4-week chart for Bitcoin, has spent 42 bars or 1,176 days trading in this range, consolidating at the hard right edge around the prior all-time highs. I know a lot of people have been calling this a triple top, okay? 1, 2, and 3. And maybe they're right, okay? There's nothing in the laws of the universe that says this could not resolve to the downside. It absolutely could. But the people that say we can't go absolutely vertical from here, I am here to tell you that you are sorely mistaken. Absolutely everything and anything is on the table. And like I said, 42 bars or 1,176 days. Now, this chart on the right-hand side is Bitcoin from about 2014 to late 2017. It spent 43 bars or 1,204 days in this consolidation right around the prior all-time high. Now, you better believe that in this neighborhood, a whole heap of people were calling double tops, just like they're calling triple tops here. A whole heap of people, back when Bitcoin was trading just around $1,000, said, no way it can trade above 1,000. No way it could go to 2, 3, 4,000. But as you know, it went all the way to about $20,000. So I am here to suggest, okay, that 1, everyone be open to a rollover and a triple top. But 2, everyone also be open, if this thing is to break out to the upside, to seeing numbers that right now seem like a pipe dream. We also have Newpool down the bottom that I wanted to point out, okay? Take a look at this. We form the top right around the top, okay? We go all the way down into the Hope region, only to base for a bit, come back up, trade in optimism right around here, okay? And then we work our way up to the breakout level right around here. And then when the thing breaks out, we move from belief into euphoria before the ultimate top comes in. What have we got today? At the left-hand side of the screen, okay, today we've got an incredibly similar setup. Move down into Hope with a little bit of a range. That forms the bottom. We move up into Optimism and trade sideways right here. Notice how moved into Belief, okay, cooling off, just like we moved into Belief, cooling off, getting ready to see this thing push up to Euphoria as the potential all-time high break emerges. And if you're looking at that and saying, Camel, this is just hopium. There's absolutely no way. Why don't you just give up? The top is in, okay? To that I simply say, have a look at this comparison to oil. At the bottom of the screen, we have got oil, okay? Notice the structure, incredibly similar. We go 1 into 2, into 3, into 4, before the 5th comes in. Also, right around the breakout level, oil was trading at about $69 a barrel, only to shoot higher and end up at around $150, $160 a barrel. 1 into 2, 3 into 4, looking for that 5th. And interestingly, to me at least, okay, right around that 60,000 level, looking for potentially up to 150, 160K plus. So sitting here and telling yourself, convincing yourself that Bitcoin can't possibly go higher, likely because, respectfully, you probably missed the entire move off the lows, when the structure is incredibly similar to oil as it stands. As I've been saying over and over and over again, the one component that we're missing here from this entire base case hypothesis of mine, from the entire move in Bitcoin, is we are missing that final 5th wave, or, as I've been saying over and over again, we've been missing this 3rd and final blow off top angle. We've had kind of 1 or 2, depending on where you want to draw it. Let's use this. And then the last one that we're missing is that 3rd and final blow off top angle. That's all that's been missing this entire time. And again, to sit here and say it's impossible, we got a triple top in play, I mean, that's one probability. We cannot discount the fact that the top is already in, and that right there for Bitcoin was the left translated cycle top. We can never discount that. But structurally speaking, to say that it can't go higher just because you don't believe it is simply not good enough, okay? As you can see from these structures, incredibly similar, as I showed you before, cycle-wise and timing-wise, incredibly similar. we might just be a maximum of 4 weeks away from seeing that all-time high break. And speaking of oil, I had an awful lot of people ask me about oil over the past few days and weeks. And my arbitrary yellow squiggle, as you can see right here, okay, remains undefeated. Who else? Who else can draw these yellow squiggles on charts with a higher accuracy than me? If you know anyone, please throw it down in the comments, okay? Throw it down in the comments. I would love to follow them. In all seriousness, though, okay, oil is more or less behaving as expected. I've been talking about this for a long, long time. Ever since back here at around $95 a barrel, all sorts of people from all walks of earth were calling for much, much, much higher oil. And I said, no, we're going to roll over. It doesn't make sense for oil to be breaking out. They did the same thing here. They did the same thing here. Wholly speaking, I have been expecting oil to trade down to something like $30 or $40 a barrel in line with these daily and weekly cycle counts right here. And largely, this is for a number of reasons, okay? Number one, I believe that we are not cutting rates into normalization and engineering a soft landing. As I've been saying over and over again, I believe we are cutting into a slowdown. If we're going to have a slowdown, there should be less demand for oil because there'll be less production and less movement in the economy. So if we have less demand, then the thing should move to the downside. The other thing is, oil is quite highly correlated with CPI, with inflation data. And whilst everyone in the markets has been calling for sticky inflation this entire time, right? And whilst everyone in the markets has been calling for that classic 1970s inflation fractal to play out, where we had a spike, we came back down, and then we spiked again. As you know, if you've been part of the Camel Crew for any length of time at all, I have been making the case that everyone there was wrong, okay? Inflation is not as sticky as people think. We had a short-term wobble in the data set, and the real risk the entire time has been disinflation before ultimately a short period of deflation. So if that is true, and inflation is not actually sticky, we're not going to see another push to the upside just yet in inflation. What should we expect to see? We should expect to see inflation come off, and therefore we should expect to see oil continue to be crushed. So far, so good. Once we get into this $30 to $40 neighborhood, okay, we might have to make a bottom here first. Eventually, I think all the people that are calling for triple-digit oil are going to be right. I think we could easily see $150 plus a barrel out of the lows. And if we really have a true deflationary bust, okay, it's entirely possible oil goes practically to zero. I mean, in the C19 era, it went negative, right? It literally went negative. They were having to pay people to take it away from them. So could we see something like that again in a true deflationary shock? Yes, absolutely. But for me, the big thing that I am looking for is, can this thing continue to move lower? Can it continue to prove everyone that thinks inflation is sticky wrong? Can it continue to prove everyone that thinks these rate cuts are going to be bullish for markets wrong as well? I think it will. And ultimately, once it has moved down into its sub $40 a barrel level, then I believe we've got a nice easy 5x type minimum trade set up from down there. If we can get as low as $20 a barrel, then we might even have a 10x plus trade on our hands. So that is what I've been looking to get hold of the entire time. I know a lot of people, I was talking about shorting oil and shorting these moves down, and frankly, I just got kind of distracted managing risk in the stock market and locking in profit from the crypto stocks. I kind of went and shifted my focus to protecting my capital and locking in the gains that I've made over the past couple of years. So I haven't been short over the last couple of daily cycles. But like I said, it's one thing to say, well, we could have been short here, we missed out on a few trades, which is true, we did, objectively speaking. But for me, the real trade setup for oil is to wait for this flush to unfold, okay? To wait for some big move down, something like this. And then perhaps in here, we could get a repair made, we could get a trade on something like this with a stop down here. And then it should be, who knows how high, okay? I see some people with targets of $500. I don't know if 500, I mean, the world's going to be over by then. If we're being honest, $500 a barrel, I don't think anyone should be cheering that on. What would the dollar actually be able to buy you? I mean, at $500 oil, we're probably going to have like, I don't know, $25 loaves of bread and stuff like that. So I don't think anyone should be cheering this on. And I really don't think we get to $500 a barrel, but do we get to perhaps a peak of 200, which would be about $50 above this high here? Yeah, I think we could do that. And from lower down, you know, that's a pretty nice trade setup. So for me, this is more what I'm focusing on rather than worrying too much about the shorts. Overall, though, I've been very consistent in saying this thing is probably going to continue to move lower, and so far seems to be working out. So daily and weekly cycle low due sometime in about 40, 50 sessions. First, we've got to probably have a counter trend bounce out of the current daily cycle low that seems to be in the making, and then that should resolve to the downside into that weekly cycle low. So for all the people that have been badgering me to cover oil, there you go. There's my thoughts. Not really much has changed, of course. Oh, and I should probably state clear invalidation for this exists. If the upcoming CPI print on the 11th is scorching hot, then this thing will probably turn around and break out. And then, of course, I'm flat wrong about this. But all the while, we continue to print failed daily cycles down towards that weekly cycle low. Makes perfect sense to me. As discussed previously, oil is doing what it was expected to do. Gold looks to me like it is trying to work on a daily cycle low being confirmed. So if you're a level 3 member, look out for that. We'll probably be making a video for you guys about that today. And silver looks like it's probably going to be wanting to attack this breakout level. So that's happy days, long and strong there. I'll cover the miners and the ETFs for the members when I make a video update for you guys after this. Dollar found a daily cycle, probably looking for a left translation and a fail here. I would think. So chance that's a weekly cycle low and we're going to continue up. But until we make a repair, then I don't think it's reasonable to be assuming bullish reversals here at the moment. I think we probably have got to see this thing continue to fall just for a little while longer. And that's largely because we're going to continue to see the yields come off as well. Again, in line with the undefeated arbitrary yellow squiggle. Of course, on a more serious note, this makes sense because we are about to see rate cuts in less than 2 weeks, as I said earlier. Bitcoin, is it going to undercut this low? And are we going to have to entertain a cycle low somewhere down here? Or are we going to form a higher low and start to rally out of here? Hopefully it's the latter. For now, we'll see how it goes one day at a time as always. And the big thing for me is this VIX spike going to resolve down to a cycle low? Are we going to end up seeing a big red candle in the VIX, get down below 12 to be able to hedge the longer term risk? And does all that occur because this was a perfect half cycle low on the daily at around day 21? Can the LARP fractal on the Nasdaq continue to play out? Can this thing now turn around and continue to push and look for third and final angles? And most importantly, can the Dow Jones, can we indeed continue to hold this third angle? Can we get a push up? And can we use that to exit the markets and flip short? Still pushing this Russell 2K trade from the lows. Okay, so happy day, still targeting 2,700. So as you can see, not a great deal has changed so far. All eyes on the unemployment data. I think that will be a significant major market catalyst. Remember, we're right in the timing window for half cycle lows across the board and for cycle lows for the metal. So from a cycle perspective, we should probably be looking for upside out of the economic data today. And then, of course, all eyes will be on the CPI data next Wednesday. So other than that, enjoy the rest of your week. I hope you're doing well in life. Until next time, take care from me. All the best. Cheers. Bye.